All right, good morning then, everyone, on Thursday, the 13th of June, as it is the morning after a pretty action-packed day across the economic calendar yesterday. We started with US inflation missing consensus across the board. You can see all four metrics, the headline print year over year, total rate of inflation month over month, and the core CPI prints year over year, month over month. All four of them missing consensus. Total rate of CPI 0% over the month of May, so it is quite a welcome development for the Federal Reserve, and you can see the reaction to markets across the board. Broad-based US dollar weakness off the back of that aggressive US dollar weakness. You can see yields, solid downside across yields. You can see equities a bit kind of all over the place on a couple of these post CPI from yesterday. You can see the Dow Jones, ripped higher aggressively, then retraced all of that move in the lead up to the Fed. So a pretty volatile day in the Dow Jones yesterday. The Russell had solid upside off the back of CPI as well yesterday. The Nasdaq and the S&P were a little bit choppier in relation to that. Obviously, the US dollar across the board and yields as well. So a pretty I will say dovish response. I mean, it's not technically the correct word, but weak inflation print. As I said, a welcome development for the Fed. Then we came into the Fed and they got no change to any of their economic projections from between the hours of 1:30 to 7, but we did get updated economic projections. Now, this tool that I normally use hasn't actually managed to update, but you can see what it was published on the 20th of March, as you can see down here. You can see where my mouse is. Expectation was for 3 interest rate cuts by the end of 2024, 3 by the end of 2025, 3 by the end of 2026. That has then been changed to reflect 1 interest rate cut. Like, market consensus was for them to change it to 2. I was kind of saying yesterday that, I was saying in yesterday's video that this should probably go to 1. Right, it did in fact go to 1, but then 2025 they said they'd have 4 cuts, 2026 they said they'd have 4 cuts. So 1 plus 4 plus 4 equals 9, and 3 plus 3 plus 3 equals 9. So ultimately you're still going to end up in the same point in time, just a bit of a change around as to when they're going to cut those interest rates. So the Fed see 1 cut through to year end. I was reading Goldman Sachs still think that is going to be in September, regardless of what happened yesterday. So I haven't changed their opinion too much on that, and that probably seems somewhat appropriate, unless inflation decides to take a turn higher, which I suppose you can't really rule out. They changed the element of the statement saying that they have made kind of minor progress towards their inflation goal. Their last meeting, they said, I can't remember the exact word off the top of my head, but said something along the lines of the fact that inflation is struggling to reach their inflation goal. Now they said they've made a slight bit of progress, should I say, towards their inflation goal. So a slight bit of a kind of dovish shift in the narrative. Maybe that comes in line with an expected weaker inflation print yesterday. It goes in line with that inflation print yesterday either way. Kind of noting a slight bit more progress towards it. And then the press conference came out and it kind of said enough to satisfy the doves, enough to satisfy the hawks. And what that means going forward is that he's managed to adopt a pretty neutral stance over the last last few months, managed to avoid any widespread volatility from some comments that the market participants weren't expecting. So kind of trying to let the data do the talking. Data from yesterday shows inflation pushing lower. Again, I mean, it's not a situation where they would have historically cut interest rates, but considering where they are, they say interest rates are restrictive. I do need to see. I mean, the weak CPI number for May was only 1 reading, says Powell. When we are more confident, then we can look at loosening policy in reflection on the CPI print yesterday. So 1 CPI print, not enough to go and cut interest rates, but if that pattern does persist, they will go and cut interest rates, as they are a little bit over restrictive at this point in time, which is necessary to get inflation under control. So they will want to normalize policy as much as possible, or as quickly as possible, should I say, but they can't do it too quickly to risk inflation pushing back higher again. So what that means going forward, you'd have to expect probably US dollar weakness. I mean, I don't say that with a massive amount of conviction. I still do think the Fed are going to cut interest rates less than some of the other central banks. before the other central banks do go and do it. So not as clear cut in the dollar, but I do think if you look at it from a stock index perspective, I mean, I still think any of the dips on these you probably buy back into, and you continue to get long stocks. He's essentially confirmed we're going to get the same amount of interest rate cuts. The economy is not performing badly. Inflation still comes down. That is a situation where you probably look to get long stocks. So the nice thing to do would be the nice thing to happen would be a bit of a buy the rumour, sell the fact kind of reaction to it. A bit of a sell off in stocks, providing a dip to buy back into. But I don't think it changes too much from the stock index perspective. Probably puts a bit of downside pressure on the US dollar, but yeah, not too much to come out of that yesterday. It's a bit of a waste of an hour and a half, 2 hours of everybody's life yesterday evening. Managed to tell us absolutely nothing that we don't know already. So yeah, nothing to see there, and we'll move on from that one, I think.